Good morning, good morning. Good morning, Sheila. Good morning, YouTube. Good morning, everybody. Let's get this show on the road. We got push lower. We have an opening range between 550 and the 72, and we're getting a break right under it right now. That's a persistent selling at the open. We have targets, and target is 325. Looks like we're gonna head there fairly quickly. Good morning, Safe. We're getting a bounce. The market is out of sync here. I mean, you would expect a bit of a bounce, but we gotta watch it and see. Market is out of sync here. We're testing harmony zone number one, which is first resistance. So we have to look at where we at location wise, because this push above is definitely significant. It's most likely we're going to turn into 425, and that will lend itself to a reversion to the mean where pullbacks are buyable. So here we go. We hit that level. So basically, the market pulled back to the reversion to the mean, and now it's going to be critical. Any pullback needs to make a higher low for a target of 450, and if we do that, then we have bigger targets to 5, and potentially retesting that high, as long as we continue to trade under or above 350. Target is 450. Next target is 475. Hey Adam, good morning. All right, let's take a quick look here because we're back into the opening range, right? So we have an area of interest is right here. As long as we continue to trade, if this area hold, which means 481 holds, then we have a chance at breaking 400 again, and then continuing to the low of that 370, then selling pressure continue. So we need to just watch for this zone. It's going to be very if we end up breaking anything over 490, then that's going to be critical for the longs to reclaim. So we're back into that zone here. All right, we got a nice bounce off Harmon Zone number 2 off the 400 whole number. That's a big deal. There's a captain set up short on the 50 NT Rinko to be conscious of that. We're about to close 75, then we have a 500 target. All right. We got a potential push towards 70. Harmony zone number one. If we break 70, then that would set the stage up for a failure of the ORB. And then we'll be going to 50s, 53s to be exact. ORB is a opening range trade, buddy. So see that right there, the opening range, the first 15 minutes. That's what most traders will be trading on an expansion basis, but the majority of the time, that type of setup, typically fails. So we're basically playing a game counter to the ORB. People are thinking in terms of 78 breaks out, let's get long here, and that's kind of their thinking, but we're thinking opposite to it. So we're seeing a little bit of that failure coming through. I don't. I use it to trade against the people who do. Here they come again. I mean, the sellers are resisting 500 in a convincing way. The market is out of sync here, and we're at the top end of the resistance against that 500, and we're seeing pressure. There's another attempt at there's another attempt at it here. As long as we could protect 86s, we should be showing continuation patterns lower. And we have a target, and the target is going to be 407 on a short basis. So why 407? So a couple of things. If they stick to rejecting this high and the lower high and the 500 and the top end of the ORB, then the natural place for them to go is actually the mid range of that range, which is 406. So just kind of keep an eye on that. There you go. Man, oh man. That's what we needed to be in. I know that they came here fast. I mean, but did you see the logic, Adam? Though the logic is sound, and you see this happen often. And basically, what we're doing or thinking in terms of what our retail traders are doing and what can we do, because most of the ideas that they have fail. So if there's a lot of traders trading ORB, well, how do they fail? They buy here on that expansion for a breakout, and they run into a wall, and they start getting stopped out. Now, is there times where the market just holds that level and just keep going? Yeah, but the majority of the time is these structures on a first touch basis kind of fail before they even go back up to reassert themselves. So, I mean, we could just play that game. So keep an eye on that idea. We'll be talking about it often. I'm an anti ORB guy. I'm waiting for them to fail at these levels and just kind of join it, and they do the same exact thing on the bearish side anyway. So here we go. We're coming up to that same exact level. I mean, the first area is good. Let's see. We're hitting harmony zone number 2, so that's the resistance area. Okay. I mean, they're forceful here. I mean, we're not gonna fight them. We're not gonna fight them. Yeah, another rejection up there. They tagged the stop and came back in. So we're at support right here. All right, guys. So what we got going on here? We got the market right now so far in and around harmony zone number one, and they're showing the capacity to buy in and around the bottom this zone. So that's the bullish behavior. If we end up breaking anything over 90, that will reignite the longs. If we break anything under 60, the shorts are going to be in charge. And here we go. So now the market is out of sync. They are out of sync. And we want to see what they're doing here. So we're seeing the failure at that high, another attempt to add it. Okay, that's failure. That's failure. I mean, they're coming up to harmony zone number 2, which is support. So we want to see what kind of quality bounce they have. I mean, this is typically where they would bounce. That's not a big bounce. Yeah, I mean that's good selling pressure. We may end up going to that 400 that we talked about earlier from that failure. Let's go back to that level. See the ORB? So the ORB traders are not having a good time right now. They're getting, faded back into that range, and they're trying to figure out if this is gonna make a higher low and run back up, or are we gonna collapse right under that 406 and then just get crushed here. Hey, liquidity. We got ourselves right now. A captain set up short on the 200 NT Rinko harmony zone number 1 and 2 are supporting the structure going lower. Rallies into harmony zone number 1 and 2 are shortable, and we're very close to our ORB failure target. How these are calculated: harmony zone number 1 and 2. It's an algo I developed, and it's simply looks at market structure. Factors in a couple of things: movement and structure, and volume. But the main, if you want to weigh, it's more of a market structure than anything else. Yeah. I mean, where we at right now is very possible that we took out the stops here. Look what they're doing. Took out the stops right above 500. Boom. Took out the stops right under it, under that 20, and they're trying to hold it here. I'd rather be short than long, especially with the 200 NT Rinko producing a captain setup short. So we just got to be very careful here. So that is official. I mean, they literally took them to the cleaners on this one. That's the ORB. So if that holds, man, we're going all the way down to 336. And let's look at the opening range. That's the mids of the opening range, right? And a 72 is a break of that range. So they're coming back to retest. I get it. I mean, they're gonna the longs and the shorts are gonna fight. Harmony zone number one is resistance. So let's see how well they hold on to it here. Oh, excuse me, guys. Falling asleep here. All right, harmony zone number two. So harmony zone number one, they did not really test very well. Harmony zone number two, we need to see a higher and a lower high in and around this area. But on a first touch basis, they're coming in and putting some resistance. I mean, it's so interesting to me to see them do this kind of thing. I mean, here we go. So zone one and zone two, they slashed right through them, and now the market flips, and we're going right back up from the mids of the ORB back to the top end of the ORB, giving people who are trading that signal a little bit of hope that we can get an expansion breakout. But we'll see. I mean, I'd rather trade against it. To be honest with you, we'll see what they do here. Now the market is in sync on the long side, and we have to protect 504 in order for the shorts to gain control. Right now they are under stress, big stress actually. So when we come to these zones liquidity, we are looking for the market to uh, give us a structure and a behavior. You get a higher low, you get um, pullback and a hold of that range, then that is a buy signal for higher prices. Right now, the market is heading toward a target of 500, which is a big target. Looks like they want to tag that high of 506 and just run through it. So this is interesting. We came almost to that target and got faded. So that is negative behavior right there. Look right to it. Okay, they closed that candle. I mean, that kind of puts us in on a bit on a defensive mode, trying to get, trying to get long. They may break that 60. No. They're fighting here. You break 60, then you get a push. Here we go. We may end up going all the way down to 40 if that continues. Very nice, very nice. That's the failure of the ORB again. How about that? That's another one. Failure, failure, failure. Multiple failures. Oh, you made some 3 grand on that one? Yeah, good, 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 good. That's a big deal what we're seeing here because let's put it this way. If we close this candle lower at that 400, we're setting up the stage for a captain setup switch trade on the 200 NT Rinko, and that is a big signal short. So we're at support right here, and that support area is harmony zone number 2, first touch bases. This is the second touch bases with a double bottom. So that's gonna be a line in the sand for the shorts, for the longs really actually. So they need to hold that, and if they do, then we could be coming up to 450. So that is a critical level for them to hold, and if they don't, we're going to be looking for shorts on a swing trade basis for targets that goes to 350 and all the way down to 250. Yeah, they're holding it here. They're holding it. They're holding it, guys. So they're gonna push back up and try to shake some people out. Yeah, like I don't want to overcommit to the short side here because the market is in transition. We're spending time in the neutral zone between harmony zone number 1 and 2, and that is the definition of chop. So you're gonna get a lot of chop in and around a couple of levels, this neutral zone and also the mids of the ORB, and we're in the mids of the opening range as well. So you're getting a whole lot of cross traffic here. You don't necessarily have an edge trading this type of price action unless we trade the harmony zone number 2 on a first touch basis, but that trade is no longer. there. $410 really? Scenario short. Man, the longs are trying hard here. 434. You break the 435. We may get a counter trend move that takes us back to the 50s, 60s. The 35 right here. All right, they're doing it. They are doing it. They are doing it right here. So we're going to get a counter trend into the 60s. No love for the shorts here. They needed to really kind of reassert themselves, Adam. You had harmony zone number two, and just zone number two was just not selling. And we spent a lot of time between zone one and two in the neutral zone. So, and if you look at the ORB, look what they just did here. So they hit the mids of the ORB and double bottomed it and put that 34, 35, 34, 35 candle, and you're automatically going to get a bounce right back up. So you need to kind of be careful of being short right about that area, 34 break. Now you're going to get a push to the 60s, 70s. And there we may get another shot at getting short again. Yeah, I know. Jesus. That's funny, Joseph. So ES, we're looking at a continuation trade here, a lot stronger than NQ, be honest with you. And we have a target of 2 at 739. We'll start getting worried if it breaks 73.37.50. Okay, a little bit of a failure here coming very quickly on NQ. So back to harmony zone number 2. So it's the market's out of sync. It's overall it's a mid-range trading. I mean, if you look at where we at on the 200 NT Rinko, what is that? That is literally sideways chop. If we break 403, we'll break the 400, and that will lend itself to a run toward the lows. And if we continue to play this game, then we'll chop it up, and a break above 502 is a breakout out of this very tight range. I'm more inclined to say that they're gonna probably break it lower because you have that captain set up short, kind of working in the direction of that idea. But no conviction so far in the market. If they break 43, they're gonna counter and run again. Yep. So just watch out here. Watch out for a run up. Here comes that 60 again. Good morning, Marty. How are you, buddy? Market's in sync. Right here, it's a bit of a stop run. So we're literally inside this range right here, which is the mids of the opening range. Non-directional scalping environment. 506 is a break, and 8384 is a break of it. Anything in between, fading seems to be the play. Man, how about that for a market? We're running into the same zone. I mean, there is a talk that it's winding down, but they may finally break it. They may finally break it. Yeah. I mean, you see this, you start thinking in terms of a fade against that whole number and a break under 70. If we break under 70, then there is potential that this price action can start rolling back in. But till then, I'm gonna just kind of watch it. E plus partial only. F common textbook E3 continues but late. Yeah, here you go. Longs are coming in again. Structure of the market here is long, but we're right at resistance and target number 3. Okay, target is hit. Next target is 525. There is a bunch of stops sitting right above 506. So here we go. They're going to start picking them off and running. Yeah, not bad, not bad. We're getting a little bit of an expansion here. We're still within the opening range, but above the ORB range. So you're getting that double bottom here, a higher low, 43. You're getting a push into the 70s, and the 06s are breaking. I mean, they could just run the stops just to fail them. I mean, I don't go long here. I needed to go long on a pullback, but definitely market is okay. That's a bit of a struggle here. Double top action going on against the target of 525. The market structure right now is still long. I mean, they could trade under the 500 and go to 85, and that will damage the structure of the longs. Almost target at 525. So this is continuation pattern here. Target is 550. How's everybody doing so far? So at these levels are the only thing that's just viable right now is a continuation trade long on these mid-range pullbacks. Nothing really truly big. I mean, you put in a captain setup here. That should be a buy signal as high as that price is, but whatever. I am gonna put my stop right here. It's either gonna start going or it's not. Doesn't look like it's gonna go. Well, yep, it's not. It's interesting that it's doing all this. That's a little bit choppy right here. Well, let's see if they can break that 20. Okay, that's enough of that. I mean, you anticipated twice. Yeah, I mean, like right here, that's so long, but that is just one hell of a noisy price action. The big deal is breaking 20. Well, we'll see what this kind of market has to offer. I mean, right here, it's just the longs are in control. A break under 25 could be important. Yeah, there is a little bit of distribution going on here. They're trying. The shorts are trying. It just has. They have to pick up the 25s and the 20s, but we'll see. Yeah, that's a good question. When does this end? I don't know. I mean, we're at the top end of that opening range, right here. They retraced it once. I mean, that's an area of resistance against the middle of the range. So we'll see. Ultimately, you got to break under 21. So speed, range, and behavior. Speed is slow. Range is uh, expanding, and the behavior is long. Pullbacks are viable on a swing trade basis. Market is extended, but like that ever matters. Market just keeps on going. I mean, here we go. I mean, you're getting a little bit of double top behavior, but you really got to break that 20. Slow grind and higher. That's the what the market is doing. Try not to go against that little move. I'm gonna take a 5 minute break. Maybe by the time I come, a big move will happen. So far, persistent price action higher. All right, we're back. So they pulled it back in into harmony zone number one, and now they're running it right back up. So that tells you, the market is just simply not short. Now, if we stop right here and break 20, that narrative changes. Structure of the market is long. I always ask myself, Adam, what happens if we gave up on the idea of counter trending and fading against the current trend? What would happen? What do you guys think? Let's see if we go below 60. I mean, the question here, what's the play right here? To be honest with you, the play right here, I mean, there is a reversal plus a reversal. So right here, you're getting a little bit of a fade into that range, but the structure of the overall market is long. So we need to kind of think in that term. Now, what happens if we break 47? That would, so 47 is right here. That means the 70 NT Rinko just closed lower. I mean, that could put a structure that could support lower prices. If I'm kind of looking for the turn in price action, I would be fading here. I would be fading here. And ultimately that didn't work. And I'll be fading here. And ultimately that could push higher. So I need to kind of resist the temptation of trying to fade these highs, thinking I'm going to catch the turn when the current structure of the market is just simply too strong. You know, let the market make something like this. Then you're going to get a push and it's going to be a nice one. But the current market right now is just simply long. So if you find yourself trying to fade this, take a break. Take a break. The temptation is real. Break 72, that will lead to some selling. Here we go. I think we're going to get a bit of a pullback here. We'll see how far that's going to go. $72 is important. Yeah, you're going to start seeing the sellers come in here in a minute. They have to come in under 65. First 72, then 65. Here comes that 72 again. I know it's teasing us. But you start breaking here, you're gonna get to the 60s. Here comes the 60s. I mean, here you go. I mean, we got a little bit of it. Yeah, look at them now. Did you jump in on that one, Adam? Let's take a look at ES while we're at it here. ES came into the target of 775.5 and got faded. So that is important for the market to, if they continue to do this, the odds are we're going to go back down to 73.50.5. How we doing, Marty? Okay. manageable. Come on, Adam, tell me you're in here. I mean, that's the move. The market is out of sync here. We're coming back in to retest the opening range. Oh, they're going for it. I mean, if we get to the 500, 510, that's an area to buy into. Um, it needs to hold. We're coming into the 525.15. That's a support area, harmony zone number 2. Market is reacting to this. And something happened. Jeez. That was fast. I mean, that was literally a few seconds and boom. That run up, jeez. Yeah, that I don't know what the hell happened there. That they just like ran it up. ES is still doing the same exact thing in the same exact spot. I mean, All right, so what's the big picture here? The big picture is we're above the opening range and we're expanding. The pullbacks are getting bought. And unless that is broken and broken under 86, 486, you really are making higher lows and pushing. So the idea of getting short is really has not produced. I mean, early on, we were running into the ORB failure pattern. And from that moment on, once we broke up, really we're making higher lows. So just be mindful of that. This type of market will suck you in trying to get short and whack you. Because it's a slow market. It's not like there's not a lot of volatility in it. And typically, any low volatility market tends to favor the longs, just by definition. How was golf yesterday, Adam? I know you went and played golf. How was it? Well, that's interesting. They're putting the captain setup short right here. I mean, that's a negative behavior. So they may be pulling back a little bit. All right, guys. It's 11 o'clock and things are slow. I mean, I had one trade. I think I flatted that trade. Not much going on. So, I mean, let's just talk about it one more time here. What is a significant move that would trigger a reaction? A break under 36.75. The rationale behind that is you will get a captain setup short, and that will be a lower high from that high that we had at 632. Okay, so that would be significant, and that will lend itself to a break toward the 500, and in and around the 500, you may get bounces back, but that structure can have a consequence that could take us to the middle of the range at 483, break it to 61, and come down to trade at 385. So if that rotation happen, then those possibilities are happening. Now, if we keep making higher lows and break a structure like that, then the rotation is going to take us to the next swing target, and that is 28,600. 28,600. That is what we're looking at. NQ, I mean, ES is just doing simply nothing in that top end of the range. But the fact that it's holding up at these high ranges is a good sign that the market is long. So now we have an idea to be long and we have an idea to be short. And if you have patience, you can make some money in this market that's moving like a snail right now. Anyway,